Hello and welcome to Trade Finance Talks. I'm Mahika Ravi Shankar, Deputy Editor at Trade Finance Global, and we're coming to you from the 2025 Sibos conference in Frankfurt. I'm joined today by Andrew Bateman of Finastra, and we're just going to talk through some of the trends in trade and trade finance that he's been observing this year. Andrew, welcome to Trade Finance Talks.
Thank you.
So to kick things off, could you just tell us a bit about your background and your role within Finastra?
Of course, yes. So within Finastra, I run the lending business. So one of the four businesses that we have with Treasury and Capital Markets, Universal Banking and Payments. I've been in the industry about 26 years. Started out actually using financial technology in the Treasury at a large corporate, and then moved into every role from implementation through sales, through regional management, product management, technology, through multiple different areas of finance. But obviously banking and lending's always been a key part of what I've been doing.
So to jump straight in from your vantage point, what are the top trends you've observed in the industry this year?
So the top trends in the industry, certainly AI is playing the biggest impact at the moment. I think it started out with a lot of sort of prompt-based chatbot assistance. That's been key, I think, for educating our customers, enabling better use of the products. But that is moving so quickly in terms of new AI technology. The latest is obviously AI agents or agentic AI, where we're seeing AI enable better use of the system through sort of automating workflows, but doing that in an intelligent way where it's looking at the data, the historical trends, how the user has been using the software, and obviously that allows the user to focus on the value add, looking at checking the compliance outputs and being able to sort of provide a much greater service to their end customers.
So kind of on that note, how do you think that that's shaping the industry as a whole, I guess, with the efficiency gains? Well,
I think there's two factors to it. One is for banks to be able to provide service to a wide range of customers, so not just the larger corporates, but across the mid-size and SMEs. You need highly efficient systems, and particularly when you get down to the SME market, which is a huge growth area. It's an area which has been underserved to some degree. There's a huge trade finance gap where there's a lot of SMEs that don't have access to it, partly because the banks haven't been able to offer those services at the right price point. The technology's too expensive. They don't have all of the history, maybe the credit history and the risk profile, so they don't have that information. And it's a gap that I think was calculated about $1.7 trillion. So there's a huge opportunity for banks to be able to offer that. And we've seen a lot of banks trying to get into that space. So they're looking at driving efficiency in their systems. Part of that is leveraging integration between systems, is providing a better end user experience through sort of the corporate channel. Certainly it's embedding AI to drive efficiency, but also to differentiate themselves.
So you mentioned some of the challenges for implementation of these systems for SMEs. I guess in terms of credit history and just maybe access to liquidity, but what about some challenges for bigger corporates or across the board?
Yeah, I think for bigger corporates, again, it's for them, they want to be able to speed up the process, and the trade market's been quite inefficient just because it's so heavy on documentation and a lot of manual processes. So if you're a corporate and you've got a high volume of trade, trade finance requirements, you've also got tariff changes, particularly in the current sort of geopolitical environment that we have, and being able to adapt to that. Having manual processes is not going to make that very easy. So for them, they're looking at the banks offering very streamlined solutions, the ability to digitize as much as they can, and provide that sort of digital flow of documentation, simplify, how they're operating. Another aspect, I think, is we've got a shift in the demographic of users of the system, both within the bank as well as the end customers. The newer generations, their use of technology is quite different from maybe the more mature users that have been in this space. And I think there's a couple of areas there. One is their understanding of the market, so just really the basics of trade finance, and then obviously very complicated systems are quite different from the apps and the leveraging ChatGPT, etc. So how they interface with those products is very different. So for the banks, it's enabling their own users, their internal employees, to get up to speed very quickly, to be able to, it's not about just transferring that knowledge from employees that maybe are exiting out of the business, but it's about providing tools that enable them to find out information quickly. So prompt-based assistance, which has been a great part of sort of the AI rollout, leveraging LLMs or even SLMs. So sort of focusing in on that data sets that are relevant is a huge enabler for them. And then that user experience is changing. So the UI UX becomes really important in just how they're interfacing. And I think some of the advantages of modernizing the technology stack, cloud native solutions, embedded AI are all absolutely necessary for banks to be investing in if they're going to be able to not just service their clients but just make their operations far more efficient, particularly with the next generation of users.
Thanks. And you touched a bit on geopolitical uncertainty and tariffs. I'm wondering how can financial institutions use AI to predict risk and maybe manage compliance capabilities?
Yeah, so if you think about the trade market, obviously being a global market, there's a fragmented sort of regulatory framework as well. So that puts a lot of pressure on banks that want to roll out global systems, but also be compliant in different markets. So they need solutions that are adaptable and can allow for those local regulatory compliance requirements. That is key to, again, the end user experience and also be compliant in those markets. AI is part of that. When we think about ingesting information, AI as a tool, we think about that in terms of compliance and sort of OCR, particularly with more documentary trade where it is still documents that have to be interpreted. That's another area where getting that information, bringing it in, but also checking what information is being provided. And when you talk about sort of credit risk, etc., banks will be asking for more information, but they also want to be able to do that in an efficient way. They don't want to have to be checking what's being provided. So leveraging AI to be able to check the types of information coming in, make automated requests for things that are missing, and then presenting that sort of full picture back to the bank.
Automated requests for things that are missing is an interesting aspect. I haven't really heard it discussed as much before. What about in terms of the convergence between trade finance and supply chain finance? Would you say technology has instigated that, and has it changed the relationship between banks and corporates?
I certainly think technology is enabling banks to be able to offer sort of supply chain finance solutions to the banks. Again, that's a critical area, particularly as you start moving down to sort of the SME space. A lot of banks are focused around the sort of the documentary trade, but financing and providing a sort of holistic view of for a corporate, their maybe their loan positions as well as their trade positions becomes really important for that sort of overall holistic view. And banks want to be able to differentiate themselves by being able to tie in not just the trade finance part of it, but also the lending part of that as well.
So you've touched on technology and modernization. What have you been up to in Finastra in this space? Yeah,
well, Finastra has been up to quite a lot in that space. I mean, we've been heavily focused on the shift to cloud native solutions, which is a huge enabler for bringing to market new capabilities quicker, but also bring down the cost of our solutions as well, so we can reach a greater number of areas of the market. Another area obviously is with AI. So we launched a number of solutions. We touched on the need to educate. So we have both Academy.ai and Assist AI, which are really enablers for the users to be able to use prompt-based questions, natural language, and multilingual to be able to get information out around either the market itself or the use of the system. Another key area for us, and this is a real driver as we think about the shift in technology is, as you start to modernize and you move to more microservices, you also want to focus on the integration between those within the ecosystem, because there's a number of internal systems that banks need to integrate to, but there's also best of breed solutions that come in solving different problems, and the speed at which banks can bring those on board is key. So we've launched our Nexus solution, which is really a new integration layer that sort of bifurcates the ecosystem of solutions that need to be integrated with our core system, which allows for a much greater pace at which we can integrate solutions into our solution.
Thank you. Just to close things off, like a bit of a crystal ball, what do you think is going to be important for trade finance providers to differentiate themselves in the next 3 to 5 years?
Well, I think there's a number of areas. I mean, we obviously talk about AI, and I think that's still accelerating in the pace of what it can bring and the understanding of it. I think a lot of banks, as well as technology providers, have been experimenting with use cases, and I think that's going to just continue to snowball, and you'll see more innovative tools being brought out. There is, the geopolitical aspects and just how do you adapt to that, and there'll be solutions that enable banks to be more compliant around some of those changes and enable their corporate customers maybe to understand more of the risks associated with some of these tariffs that are coming in at very short notice, and being able to adapt to those. Another area that's sort of starting to pick up again is around tokenization, but also stable currencies. So you're starting to see that already in the payment space, and looking at cross-border payments and stable coins, and we're starting to see that also filter into the trade finance market.
Perfect. Thanks a lot, Andrew. Actually, a lot of uses for AI there that haven't really been discussed as much before, so really enjoyed that. Thank you for your time.
No, thank you.